Company directors have a lot of responsibilities, from statutory filing and reporting obligations to managing a company's activities, performance and finances. Stay tuned and we'll run through them all. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. A company director is in charge of managing the activities and performance of a company with the aim of making the business a success for the benefit of its members, which, in the context of a private company limited by shares, are the shareholders. Their duties are set out in the Companies Act 2006, the Articles of Association, and from common law, with further specification of the role often included within the directors' service contracts and any shareholders' agreements that might be in place. It is an important and all-encompassing position that can vary somewhat from business to business. Generally, however, there are 10 key duties to fulfill, and this video provides an overview of these fundamental obligations. Companies operate under both the control of the shareholders and the directors. The shareholders of a company have ultimate control, but they don't participate in the day-to-day management of the company in their capacity as shareholders. Rather, they appoint directors to run the company. This means that the directors are responsible for all the important day-to-day affairs, ensuring that the company is managed effectively and adheres to its statutory and contractual obligations. Shareholder approval is generally only required in exceptional circumstances. And whilst these two roles are separate, it's not unusual, particularly in smaller companies, for directors to also be shareholders of the company, enjoying additional rights and obligations beyond those afforded by their directorship. However, it is important to understand that these two roles are distinct. Regardless of whether or not a director is also a shareholder, the following 10 duties will form the basis of the role of a UK company director. So let's get started with the first of these duties, and that is to always act within their powers. This first duty is actually the first of what are called the 7 duties of a director, codified in sections 171 through 177 of the Companies Act 2006. If anyone has studied corporate law in any capacity in the UK, you'll probably have heard of these 7 as they are really important. And these 7 duties actually form the basis of some of our list today, although we have added further director duties and responsibilities which can be found elsewhere, and which we'll come on to later. So, yes, company directors must carry out their role in accordance with the Articles of Association, only exercising their powers for their proper purposes. The Articles of Association are a set of rules and regulations that govern the way in which a company operates, including but not limited to the powers and duties of directors, the rights and obligations of shareholders, and how decisions are made. In many companies, the articles are supplemented by a shareholders' agreement. This is a private agreement that clarifies the roles of shareholders and directors, including their rights, the extent of their authority, and who can and cannot make decisions in specific circumstances. To fulfill their duties effectively, it is essential that all directors are familiar with the terms set out in their company's articles, shareholders' agreement, and any other relevant documents or contracts relating to their role and the company as a whole. The second duty is to promote the success of the company. A director has a legal obligation to act in the best interests of the company and in a way that is most likely to promote the success of the business for the benefit of its shareholders. Whilst doing so, directors must consider the consequences and impact of their decisions on employees, customers, business associates, suppliers, members of the general public, the community, and the environment. They must also strive to create and maintain a reputation for high standards with regard to the company's business conduct. To demonstrate compliance with this duty, directors should document their decision-making wherever possible, for example in meeting minutes and resolutions, stating that consideration has been given to such factors. Next up is to exercise independent judgment. Company directors should not allow their powers to be influenced or controlled by others. They must exercise independent judgment and make their own decisions. It's perfectly reasonable and sometimes necessary to accept professional advice, but directors must always remain impartial, reaching their decisions independently and free from third-party pressure or personal bias. Duty number 4 is to exercise reasonable care, skill and diligence. Almost anyone can be a company director, provided that they are at least 16 years old and are not subject to the restrictions of director disqualification or bankruptcy. Moreover, by law, a director does not need any specific qualifications, experience or skills to be a director. That being said, the role carries a great deal of responsibility. So any person who is appointed as a director is required to exercise reasonable care, skill and diligence. And under the Companies Act 2006, this means that a director must exercise the same level of care, skill and diligence that a reasonably diligent person would exercise with, firstly, the general knowledge, experience and skill that may reasonably be expected of anyone carrying out the same duties as them in relation to the company, and secondly, the general knowledge, experience and skill that they actually possess. No two people are the same, so it stands to reason that every director's understanding and capabilities will be different. Nevertheless, it is expected that anyone who is appointed as a director should be able to perform the role in a reasonably effective manner. The next duty of a director is to avoid conflicts of interest. Company directors must endeavour to always avoid conflicts of interest by steering clear of situations that may divide their loyalties. In particular, this applies to the exploitation of property, information, or opportunities in which the director's interests, whether directly or indirectly, are in conflict with those of the company. In the event of potential conflicts of interest arising, the other directors, if any, must be informed in the first instance. Subject to any restrictions or requirements within the company's articles, the board may authorise the situation. If they do not have the power to do so, the matter should be referred to the shareholders. If a conflict situation is permitted under the articles, or authorised by the board or shareholders, the director must act appropriately and continue to promote the success of the company. Duty number 6 is to not accept benefits from third parties. Now, to maintain their integrity and avoid conflicts of interest, directors must not accept benefits from any third party if it is offered to them on the strength of their position in the company or by reason of the director doing or not doing something in that role. Such conduct can give rise to expectation, misinterpretation and suspicion, which would call into question the propriety and probity of not only the director but also the company as a whole. However, this duty is not infringed if the director's acceptance of the benefit cannot reasonably be regarded as being likely to give rise to any conflict of interest. Next up, number 7, is to disclose interest in proposed transactions or arrangements. So this is the last of the 7 director duties specifically outlined in sections 171 to 177 of the Companies Act. If there is potential for a director to personally benefit from a proposed or existing transaction or arrangement entered into by the company, the nature and extent of the interest must be disclosed to the other directors and, in some cases, the company's shareholders. An example may be if a company is planning to enter into a contract with a business that is owned by a director's spouse or another family member, or a business in which the director owns shares. There is no need to declare an interest if it cannot be reasonably regarded as being likely to give rise to a conflict of interest, or if the other directors in the company are already aware of it. Duty number 8 is to maintain statutory filing and reporting obligations. So we are out of the main 7 director duties and now looking at other duties and responsibilities that are still placed squarely with the directors from elsewhere. Now, to comply with UK company law, directors have a legal duty to maintain a number of limited company filings and reporting obligations. These include, but are not limited to, registering the company for corporation tax, registering for VAT and pay-as-you-earn, preparing annual accounts and company tax returns for HMRC, preparing annual accounts for Companies House, filing an annual confirmation statement with Companies House, paying business taxes in full and on time, keeping statutory company registers and accounting records, reporting any change of company details, for example, a new registered office, the appointment or removal of directors, a change of details for an existing director, and share allotments or share transfers. And of course, maintaining company addresses, signage, and stationery. Some companies appoint a company secretary to take care of these compliance duties on behalf of the directors. However, regardless of who is tasked with carrying out such obligations, the buck stops with the director. They are still legally responsible for these duties and should always ensure they are up to date with the status of the company's statutory filing and reporting requirements. Now let's take a look at duty number 9, which is to comply with additional legislation and regulations. Beyond UK company law, directors and their companies may be subject to a range of additional legislation and regulations, including health and safety laws, employment law, consumer rights, trade descriptions, competition law, GDPR, licensing laws, environmental regulations, food safety and hygiene, intellectual property, equality and diversity, product safety, industry-specific laws and regulations, and legal requirements related to regulated professions. A company director has a responsibility to understand the nature of the business and be aware of all laws and regulations with which the company must comply. This is the type of area in which a company secretary specialises, so a director may find it beneficial to appoint one or consult a corporate solicitor if they require expert help and guidance on such matters. And lastly, duty number 10, which is to report personal income. Most directors receive a salary through pay-as-you-earn, which is an HMRC system that the vast majority of employers use as part of their payroll. Through PAYE, directors pay income tax, Class 1 national insurance contributions, and any other required deductions from their salary. Many directors also receive taxable benefits from their company, whilst others may receive dividends if they are also shareholders. If a director receives any such type of untaxed income, they must register for self-assessment to report and pay tax on these earnings. The director will be responsible for registering themselves with HMRC, completing a self-assessment tax return each year, and paying the relevant taxes, for example, income tax, NIC, dividend tax, and any other additional earnings that are not processed and taxed through PAYE. So there you have it, the 10 duties a company director must carry out to comply with UK company law. If you have any questions, please leave them in the comments section below and we'll get straight back to you. And if you are thinking of starting a limited company, we'd love to help you. We offer a variety of company formation packages, all designed to get your business up and running as quickly and as simply as possible. Take a look at firstformations.co.uk, that's 1ST, for all our formation options. And in the meantime, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help and we can't wait to hear from you. Until next time, cheerio.